Hi, ladies and gentlemen. Welcome to another edition of the 1040 Files. Today, I have with me a special guest, Jennifer Croshal from Walnut Creek, California. Welcome, Jennifer. It's good to have you.
Thank you for having me. I'm very excited to be here and chat with you today.
Well, Jennifer, you've got taxes in your blood, if I'm not mistaken. This is kind of in your DNA, right?
It really is, and I joke about it with friends and family and even clients now that have known me. Some of our clients have known me since I was 4, 5, 6 years old.
Were you doing taxes when you were 4 or 5 or 6 years old?
No, no.
Okay, you weren't.
I did start assembling tax returns and doing filing when I was about 13, 12,
You
13 years old.
did. So
Yeah.
you've been doing this for a long
Yeah.
time. Her dad is Stan Pollock, and Stan's been a longtime speaker for Gear Up. And Jennifer started out going to Gear Up as a registrar, and now she is a much esteemed speaker with Gear Up. So we're lucky to have you, Jennifer, and thank you so much for being here. Today, what we're going to be talking about is forming an entity, starting a small business. And there's a lot of things that people maybe don't know that they wish they did know about, the tax and what do I need to do to start a business? Maybe we start, I don't know, do you have any fictional businesses that you can think up off the top of your head?
ABC company, you know.
ABC company.
Yeah. I love this spiel and as I call it to clients because I feel like no matter what industry they're in, they just appreciate knowing what do I have to do first, what are the steps. It
Yeah,
saves them a lot of time. So whether they are a sole proprietor, maybe a therapist, or maybe they're opening a bookstore or whatever they're doing, they just want to know what are the things that would be helpful or applicable to them.
makes sense. So
Yeah.
we've got someone, they come to you, they say, okay, I want to start a business. What's the first conversation that you tend to have with them? What are things that you talk about with them as they're thinking about starting a business?
Great. Yeah. So first I ask, have you started the business yet? Or when are you starting the business? And then we kind of talk about, depending on when they give me a call, is this October of that year or is this January of that year? The reason I ask them that is obviously to make sure that, if they're going to create an entity, that they're not going to pay, for a month of work that they're going to do, that they would start it as of January 1st if we're kind of approaching the end of the year. So we talk about when they're going to start their business, and then I ask them, what type of work are you going to be doing? Have you talked to an insurance agent to see what kind of liability you might be putting
Sure.
yourself into? Have you talked to an attorney about maybe creating an entity? Where are they? Did they just talk to a buddy and they're thinking about making a business, or have they been in the industry and they know what they're doing? So I see where they are.
So they've started an entity, they've decided, and now they're seeing, let's say it's just one person and they're starting a business. What are some different things that a small business person can consider about type of entity? What are some things that you discuss with your clients?
Yeah, great question. So I usually ask them, how much do you expect to make this year? The reason I ask that is when you're talking about type of entity, you're sort of thinking about not only the liability protection, but also you're thinking about tax savings. Are they going to save in their federal taxes by creating a corporation? So I talk to them about how much do you expect to make? Is this going to be a lot of money this year, or are you going to have to build it over time? And that is going to tell me how I should advise them on creating an LLC, depending on where they are in the United States and how much that fee is going to be. Should they create a corporation and have to file another tax return and run payroll? So I talk to them about how much they're going to make and what industry they're in so that I can get a feel for that.
You just threw out a whole lot there, and there's a lot
I
of
know.
good stuff.
Meaty. It's meaty.
So someone decides to start a business, and you brought up insurance, and of course, insurance is necessary because you never know. in this day and age of lawsuits and to have that liability protection. But then you brought up something else. Jennifer and I are not lawyers, but we sometimes play one on TV. I say that jokingly, but we talk about the idea of setting up, and Jennifer mentioned an LLC, a limited liability company. Can you just go through without giving legal advice? I mean, we can't do that, but just general what an LLC is.
Yeah, great. You're right. We're not attorneys. I tell clients, I'm not an attorney, but this is my experience, and I highly recommend that you talk to one about your specific industry because it's also very different for every industry in every state. So I'm in California. It's a very expensive place to have an LLC, but many states it's a little less expensive and it might be a good option for people depending on their industry. And an LLC is a limited liability company, exactly what it sounds like. It's supposed to protect people against certain liability that they may come into contact with in their industry. The problem with it that I usually share with people and why they need to talk to an attorney is it's all based on legal precedent in the state that they are in and they're doing business. So they may think they're being totally protected and they don't need insurance or that it's going to protect them and absolve them from all liability, but it may not. So they really have to figure out if that's the right match for them.
So a lot of people think that, okay, set up an LLC and they think, okay, how is an LLC taxed? And I think there's a lot of misinformation out there on the taxation of LLCs. So talk to us, Jennifer, about how LLCs are taxed from a federal standpoint.
So from a federal standpoint, they are actually a disregarded entity. So you don't file an LLC federal return. You file your normal individual income tax return with a Schedule C or a Schedule E or wherever that income would be reported normally for a rental or a business. And then the LLC may have to file an additional state tax return for that LLC to report the income, and each state will have their own rules for how that LLC will be taxed and whether there are minimum fees or so forth.
So an LLC right now, it just goes on a person's individual tax return, right? What
Exactly.
happens if two people decide to start an LLC? What do they do tax wise?
So if two people decide to start an LLC, if they will actually need to file a partnership income tax return. And so this is a multi-member LLC return, and they report it on a separate business tax return. That business tax return will then flow that income to them personally using a form called a K-1 form to share that income and deductions with the individual themselves.
So this, you just said partnership, and you're right. And this is where there's nuances too amongst the states. Like in my state, yeah, you got to do a partnership return. But there are other states out there, like your state, Jennifer, California, Wisconsin, Texas, and those are called community property states, right? You guys get to do something different if a husband and wife start an LLC. What can you do differently that the rest of us can't?
Exactly. So in community property states like in California, we can file a single member LLC tax return with the individual tax return. And that is just another form LLC return with the individual return. If it's a husband and wife or partners, they don't have to file, even though there are multi-members with a partnership return.
So, is an LLC then, is it stuck if it's one person doing it on their 1040, if it's just one individual starting it, or if it's two or more individuals outside of being a husband and wife have their own stuff with this stuff we just talked about, but two or more people start, they would do by nature a partnership return. Are they stuck with those? Can they do anything else?
So that's a great question because LLCs do have an opportunity to make an election to file as an S corporation and file a corporate return, that gives them some benefits that it's still flowing through to them personally, but they have the ability to process payroll and they have the ability to a little bit more freedom in the way that they file and the tax savings that they will file. It does come with some more administrative duties. And that I always tell clients is once you get over that hump of learning the process of filing a corporate return, it may benefit you. So don't be so put off by that process.
So without these options of filing a corporate return and making those election, an S corp really is at the end of the day, if it's one person, it's kind of a tax nothing. It just goes on their personal tax return. And if it's two or more people, it goes as a partnership tax return. The gist of it is it gives liability protection, which you and I can't talk about, right? Because we're not lawyers.
Exactly. Exactly. I tell people, I don't know what you're going to be protected from. You need to make sure that you talk to not only an attorney about the entity, but also the insurance agent. And
There you
I feel
go.
that because every industry has different insurance requirements.
So there's nothing special tax-wise about an LLC, typically, at least at the federal level. But let's talk about something else. You brought up about if I start a business, there could be some tax savings if I chose to be a corporation. Tell me what's going on there, Jennifer.
Yeah, and this again is very industry specific, but when you create a corporation and you file as an S corporation, you are allowed to run payroll, which you aren't necessarily as a partnership, and you can run payroll as an owner, as a shareholder, and by doing that, you're lowering the federal taxes that you would be paying if you were filing as a sole proprietor, for example. You'd be lowering your self-employment taxes. The
Ooh,
federal,
let's talk about that.
yep,
Because you and I both know, Jennifer, that when people come to us and they've started a business, they fully expect to pay income tax. There's no surprise on paying income tax.
exactly.
But the one that bites them in the rear end is what? The self-employment tax.
Self-employment, yep.
So tell us, Jennifer, what is self-employment tax? Is it a bad thing? Is it a good thing? Or what is it so we can know what we're talking about here?
Yeah, I describe it to clients as, if you're used to working for an employer, they pay a portion of your employment taxes and you pay a portion of your employment taxes. But when you're not an employee of a company, you pay the full Social Security and Medicare taxes, your federal employment taxes. And that's what self-employment taxes are. And people just don't expect that to be in addition to any income taxes that they're paying. So they're not planning for it.
Yeah, because it's not only what they have withheld from their paycheck, and that's, 6.2% for Social Security and 1.45% for Medicare, but now they've got the employer portion that the employer's matching that. And so it's an extra 15.3%. So one of the things that I often see, Jennifer, and I bet you do too, and that is people will start a business, they'll put it on Schedule C, and it'll be tax time, and they're expected to owe, and they're going to owe on April 15th. But they don't expect the self-employment tax. But there's another double whammy that hits, and that is on April 15th, there's another payment that's due, and that's the first quarter estimated payments. So tell us a little bit about estimated payments just for a small business owner and how those would work.
Yeah, so I really try to impart on my clients that when they start a business, they really need to learn to change their mindset about the planning. When you get a paycheck and you're an employee, if you get paid $1,000, you can spend that $1,000. You've had taxes withheld, the employer is paying a portion. But when you're self-employed, you get $1,000 and you have to save a portion of that for paying tax. So one way that the IRS and the states allow people to prepay their taxes is on a quarterly schedule. And so that first quarter hits April 15th, and they are supposed to pay a portion of their tax liability depending on how much they're going to make. And we usually go through a calculation when they're first starting their business. And we have that initial chat. And I ask them, how much do you think you're going to make? And I give them my ballpark of, usually I say between 25 and 30% is at least what you should be saving. It might be a conservative number, it might be too low, but it's a good ballpark to start with.
Yeah, but Jennifer, it's April 15th. The government doesn't need their money until April 15th of the following year. Why do I need to make estimated payments?
The answer is technically no, you don't have to,
Do
but
I
you
have to do
will be,
anything?
you don't have to do anything, but you may receive what they call an underpayment penalty. And when you go to file your taxes the next year, you will report how much you paid in over the course of the year each quarter. And if you didn't pay in enough, determined by the IRS of the state, then you might have a penalty. And people hate the word penalty.
Exactly.
Very psychological.
Exactly. So now you talked about, though, we could save on these taxes by being an S corporation. Tell me how that works, that I could save on self-employment taxes.
So when you file your individual return, if you don't have an S corporation, you are reporting 100% as self-employed income. You can't run payroll. You're reporting all of that as self-employed income, and it will be taxed as that, 100% of it. If you file with an S corporation, all of that money is filed at the entity level, and you're able to run payroll. And the requirement is that you pay yourself as just an employee of the business a reasonable salary. And then anything else beyond that is going to be taxed without self-employment taxes. So it is just going to be an income tax. And the breakdown allows you to then save in those taxes, those federal taxes.
So I have to pay myself a reasonable salary, Jennifer. And I know a lot of people who've experienced an audit from the IRS. I don't know if you've had this, but the IRS can come out and say, well, this is what the typical widget maker makes according to the Department of Labor, so this is what you need to be paying yourself. There's a lot of wiggle room in that. There's a lot of argument in that. But one of the big thing is, if you don't pay yourself anything, then you're really hurting, aren't you?
Yeah, and I tell clients it's difficult because there isn't an exact number. We talk about ways that you can argue, you know, what number is reasonable for your industry, that maybe there are people that need to reinvest in the business, buying equipment, or they have to have a certain amount of savings because their income changes from year to year. And so talking about what is reasonable is really industry specific.
Yeah, I think it's industry specific, it's company to company specific. There's a lot of things that go along with that. Now, so I can save on self-employment tax. Now, I don't know about you, Jennifer, but my mother always told me if it sounds too good to be true, it probably is, right? Are there any drawbacks to being an S corporation?
Yeah, so the drawbacks of being an S corporation really are the additional, in my opinion, the additional expenses that come with it. You have to create the entity, pay, an attorney to create the paperwork, file the proper paperwork. You have to pay an accountant to prepare separate income tax returns for the entity. You have to start running payroll. And payroll can vary in price. Sometimes banks or entities will have it, as a free service with other things that they're getting. Other times they're paying upwards of, 1,000 to 2,000 more dollars a year if they're not already running payroll. So there are some additional expenses that come with it. And they also have additional processes like having annual meetings and minutes that they are required to follow and process and understand with having this separate entity from themselves.
I always kind of refer to that as kind of a PETA factor, a pain in the rear end factor. And because now, like you said, you got to start doing payroll. You got to start doing payroll returns. That's the worst part. It's got to be done quarterly. Actually, it could be done monthly. Depends on your whole, and the payments that need to be made. You have to do those things. You have to file now a separate tax return. In your world, is there a break-even point between being an S corporation and being a sole proprietor? Or, and again, the break-even point, it's relative, but maybe you can give us a range on where maybe a person should start considering being an S corporation.
Yeah, that's a hard question. Generally, I ask, is this going to be a consistent side job for them? Is this going to be a consistent business? Is it worth creating the whole entity and these processes? Because if somebody is, was laid off and they're doing some consulting, but they're looking for another job, I tell them don't even consider this. You might save, but not worth it. If this is an ongoing arrangement, then that's one thing. And then I usually tell them when they hit the 40, 50, $60,000 in the year mark, maybe in their income,
When you
there
say
might,
income, is that revenue or after expenses?
after expenses,
Okay.
I talk to them about what type of savings they are going to have at that point. And if they have, $3,000 to $5,000 additional expenses that come with creating the corporation, that might be worth it to them.
Exactly. Let's talk about the one that we don't see. You and I probably don't see as much because we're dealing with a lot of small businesses. Maybe you do. And that is the regular C corporation. Tell us about a C corporation, how that works, and maybe the reasons why you and I don't see many of them.
Yeah, I'm in the San Francisco Bay Area. Walnut Creek is in a very tech-oriented industry region, and there are situations where a C corporation having a separate entity is a very positive thing. And it can be from a liability standpoint and a business growth standpoint, very positive. However, the trick there and something that I usually talk to people about is that you do have the potential for double taxation with a C corporation because it is not a pass-through entity that flows to the shareholders personally. So they're paying not only at the corporate level for whatever income the corporation is going to have, but they are going to be paying at their personal level if they have any additional flow-through income from dividends or distributions.
So you're right, and I would think maybe as I said that, being that you're out in California, being out in the San Francisco area, the tech hub, I could see that you could have a lot more C corporations than what I have because there's some special things that C corporations can have that others don't, but it really just depends upon the type of industry and what the person's looking to accomplish, I think, as well.
Yeah, and how big they want to get, mergers. This is more of a legal question. And again, I connect them with an attorney to say, hey, what do they envision their business in 5 or 10 years from now? And maybe they decide accordingly because of that. But when they go to sell their business, there are some benefits to having it as a C corporation.
As we conclude here, what I want to talk about here is you've seen probably a lot of business owners come through your door. If you were to give one piece of advice to someone thinking about starting a business, what would you say to them?
Ooh, can I choose two?
You can choose as much as you like.
I think my top two tips are one, to recognize the value of a good bookkeeper and finding someone who can help them to organize the business information, the income, the expenses, tracking all that regularly, and the value of paying someone else to do it so that it's done regularly. So that's just really important because you're good at what you are good at, and you need to recognize when you don't have the time to spend organizing the business information. So that's why a bookkeeper is a great
Yeah.
help. I always tell people if you've got a good one, keep them happy. And then the second thing is to keep their business income and expenses separately from their personal, because having a business bank account, having a business credit card allows you to not have to look through all of your other Amazon purchases or purchases elsewhere and know the difference between what is personal and what is business. And it just keeps it all in one place from a bookkeeping standpoint.
That is great advice, Jennifer. Well, Jennifer, thank you so much for joining us here today. It's been a pleasure having you. If you've enjoyed this podcast, feel free to hit the like and subscribe button. Also, we'd love to hear different topics that you'd like to know about. So feel free to put them in the comments section. You can find Jennifer at PCTaxCPA.com. That's PCTaxCPA.com. She even gave out her phone number, 510-507-7986. It's 510-507-7986. Jennifer, thank you for being here, and go conquer your worlds, everyone. Thanks so much.